How's it going, YouTube? My name is Christian with Plan Your Federal Retirement. Back with another video with our All About FERS series. Today I'm getting excited because we're going to be talking about taxes, and in this case, how much of your Social Security benefit is taxable. And I figured I'd just jump right into it. I've got my screen ready to go and go through a chart. When it comes to Social Security, we're going to notice that either between 0 and up to 85% of our benefit is going to be taxable. And it kind of depends on something called our provisional income. So that's what we're going to learn about here in a second. But what we should pay attention to is our filing status. So if we're married filing joint, then the provisional income thresholds are a little bit higher. So if we're under 32,000, then 0% would be subject to Social Security, or the Social Security would be subject to tax. If we're between 32 and 44,000 of provisional income, up to 50% would be taxable. Over that 44,000, then up to 85% would be taxable. If we jump to down below here, instead of married filing joint, but we're now looking at single, head of household, qualifying widow or widower, married filing separate, and living apart from the spouse, these different filing statuses have a lower threshold for their provisional income. So notice this saying under 25,000, that 0% would be subject, that Social Security would be subject to taxes. Between 25 and 34,000, up to 50%, and then over that 34,000 of provisional income, up to 85% would be taxable on that Social Security benefit. Lastly is that married filing separate and living with your spouse, right? Notice above it said, and living apart from your spouse. This one is living with your spouse. This says that any amount of your Social Security benefit is going to be subject to 85%. It doesn't matter what your provisional income is at this particular filing status. So I'd say the first thing we need to think about is, well, what is this provisional income, and how is that important, and how is this going to be calculated? So the provisional income is a formula that we can see below, would be our AGI, or adjusted gross income. So think our adjusted gross income, we add up our wage income, we add up our interest, dividends, capital gains, we add up rental, property income, we add up retirement distributions, TSP distributions, pension incomes, right? That's not all inclusive, but that's a majority of what would be our gross income. And then there are a few adjustments to that to get to our AGI. Normally, AGI already includes Social Security, but for provisional income purposes, we're going to leave out Social Security for a second for calculating AGI. So it's AGI minus Social Security, but then we add it back in, but instead of adding it in, we add 1/2 of it to the equation. So we add 1/2 of your Social Security benefit to the equation. And then lastly, we add back any tax exempt interest. So let's just say we've got a client who their AGI, not including Social Security, is $30,000, and this is going to be made up. Let's say 20,000 comes from pension, and let's say another 10,000 comes from retirement account distributions, and that's how we're getting to that $30,000 number. Plus, they're receiving Social Security. So let's say they're receiving $20,000 a year of Social Security. Well, we're going to take half of that. So we're going to add up $10,000 of Social Security, which is half. And then let's add also into any tax exempt interest. So again, think any municipal bond income that might be receiving. Let's say they had $1,000 of municipal bond tax exempt interest, that we would add that total up, and we would get $41,000 of provisional income. So if we looked here, we would see that in this example, if they're single, then up to 85% of their Social Security benefit would be taxable. If they were married, then it looks like we would be up to 50% because we're under that $44,000 of provisional income. So just something to note there. Now, so I'd like to point out that it is saying up to 50% or up to 85%. This is not a cliff when it comes to the taxes. It's not saying that $1 above this $44,000 means that every dollar of your Social Security benefit, that 85% is going to be taxable. It means up to 85%. And there's a whole IRS worksheet on calculating what that is, and they come up with a couple or a few different solutions, and then whichever is lower is the actual percentage that you're going to be using. Good news is, if you're going to be using a tax preparation software or a CPA or an accountant who uses tax preparation software, you don't have to worry about this formula. I don't recommend handwriting your tax returns, so we don't have to really worry about it. But again, something to note here. There are a few planning points. So let's say we're not receiving our Social Security benefits right now, but we're thinking about, well, how much will be? Oftentimes I'm estimating on the high side and saying, 85% just for the planning purposes there, to err on the side of caution that, we're going to have more tax being withheld. And if it just so happens that less is withheld, that's good news, and we get more of our money back to us. But I always like to err on that side of caution, unless we really know our taxes are going to be low when we receive our Social Security benefit. So just something to be thinking about there. Also, when it comes to other tax planning strategies that we've talked about before, like Roth conversions, that Roth conversions could really affect your taxes here. And if we're, let's say, in a 0% tax situation with Social Security, that 0% of our Social Security is taxed right now, and we do a Roth conversion, and now 85% of it is going to be taxable. Well, that might not have been a good strategy if we're in our retirement years and taking Social Security and our taxes are already low. Maybe it doesn't make sense to do those Roth conversions there. So that is a point to note there. But anyway, hopefully this video is helpful when it comes to understanding Social Security benefits a little bit more, understanding provisional income a little bit more. If you have specific questions that you want to ask us, you can feel free to ask them below in the comment section. And until next time, happy planning.